Part 2 of our pattern 936 system. Welcome traders and investors. In this video, I will show you how I increased the annual return of system pattern 936 by 25%. How did I do that? Well, I just changed one rule. Let's have a look at the results of the original strategy. You can find the link to the video here or in the information below. The annual return was 4%. Exposure was only 7%. Average profit per trade was 1.15%. And finally, another important figure, obviously the drawdown, and that was 23%. Here's a figure that many people forget. How long did you actually stay in a drawdown? This strategy stayed in the drawdown for 963 days. However, if you would have done buy and hold, it would have been much longer. Just keep that in mind. Just a quick recap. I tested on the three major US ETFs. The first one is the DIA, which is also called Diamonds, and it is trying to replicate the Dow Jones Index. The second one is the SPY called SPY, which replicates the S&P 500. The third one is the QQQ, also called QS, which replicates the Nasdaq 100. Well, if I haven't mentioned it before, I tested for 24 years. Quite a long time. After making this one change, just one, the average annual return increased to 5%, which is, as promised, 25% more than the original system. Okay, we all know we can do better than this, but it's a start, right? So let's talk a little bit about the new numbers that we get with the changed exit rule. The first one is the exposure, which is now 6%, which is even less than before. Profit per trade has increased to 1.5%, which is interesting. Also interesting is that the drawdown remained at 23%. The longest flat period is 498 days, which is approximately half of the original system. Wow, that's really impressive, quite a change. So let's compare the two systems in an equity curve chart. On the left side, we see the original system with a 5-day exit. On the right side, we see the system with a new exit. And here you can see the development of both strategies in a nice animated graphics. On the drawdown curve chart, you not only see the drawdown in comparison with the benchmark, you also see the longest flat period in comparison to the benchmark. As you can see on the right-hand side, the new strategy with an advanced exit, it only has 500 days as the longest flat period. Here's a reminder. This is the entry rule. So it uses the pattern 936. We use the three ETFs as mentioned earlier, backtest for 24 years. And for the money management, we actually apply 33% for each symbol. So the only thing that changed is the exit rule. Next thing we have to do is drag and drop the sell at market block into the blocks. Automatically, the sell at market block will pop up. Now, when do we want to sell? We want to sell when the indicator crosses a certain value. So that's why we drag and drop the indicator crosses value block onto the sell at market condition. There's two conditions that we want to change. One is the RSI 20. We want to change that to 5, make it a shorter period. And the value that the RSI 5 should cross will be 50. We can do all this obviously without coding, and we can even change optimization settings here, which will come in a different video. There's one more thing you should do. You should disable the exit after 5 bars, which is just disabled. So this condition won't apply, but maybe you want to use it for some later time. So I would just disable it. So finally, here we are. Enter when pattern 936 is true and exit when the RSI 5 crosses over 50. Simple. And finally, here is the result from the new system in just a few metrics that I have here. And if you want to find out how you can even improve this system by just making a few clicks and making a few changes, watch my next video, which I will probably publish tomorrow or day after tomorrow. Hope you like that new style, and please comment if you like it and if you want to see some changes. I'm really excited. Thank you.